Welcome back to the Dividend Diplomats YouTube channel, everybody. You got your boys, Lanny and Bert, the mother effing diplomats. Lanny's drinking coffee out of the Dividend Diplomats coffee mug. If you want one, grab one in that store down there. We're pumping out 4 videos every single week, everybody. So let's hear the noise. You know what we're talking about today? We're talking about my dividend stock watch list coming up here for the rest of June.
Guys, we're looking at 2 stocks Bert's watching here for the last 2 weeks. Guys, smash that subscribe button. Give us a thumbs up. It's Sunday, fun day. Get this video to 400 likes and get yourself one of these. Maybe a hat, maybe a sweatshirt.
The mystery swag. You never know what you're going to get here from the diplomats, but it's not going to happen if we don't get to 400 likes. So let's jump right into it. Guys, the stock market, who the heck knows what is happening right now? It's doing the Daniel Bryan just going, yes, 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 and just going straight up and up. It is insane, absolutely wild.
It's insanity.
Yeah, I mean, Intel's back over $36 per share. That should tell you everything you need to know about this stock market.
Everything you need to know, Chicos.
Yeah, good times are bad, though. You know what we're doing? We're buying undervalued dividend stocks. We're building watch lists. We're trying to grow our passive income one step at a time. So that's why I found 2 stocks that I would love to keep nibbling and adding to my positions for the rest of June.
Hey, guys, it's time for Bert to man up. He's going to nut up. He's sipping on his little pina colada over there. This man right now is in Cancun, living it right now with the family, getting some R&R. But dividends don't stop. Dividend investing doesn't stop, guys. And that's why Bert is here on the prowl. 2 dividend stocks. We're going to run them through, obviously, the Dividend Diplomat stock screener, focused on 3 quick metrics: the price to earnings ratio less than the S&P 500, the dividend payout ratio less than 60%, history, and a nice solid dividend growth rate. We'll look at the dividend yield. We got 2 different industries here. One has been punished due to media, political attention, and other attention that it's been getting.
Yep.
And the other one is just a kind of a boring industry, boring stock that yields well over 5%, but has a nice history now of growing that dividend.
You know what, Lanny? Let's start with that one today. We're going to start with that one first because it's the one that I really want to talk about here. This first stock is Lionel Basel, ticker symbol LYB.
What's going on in Cancun? What are you paying a little extra
it's actually
for down there?
Screwdriver, my friend. Not a pina colada today. We're going strong.
Get that pineapple vodka going, brother.
Yeah. Yes, that's poolside. That is poolside. That's a good one. I will definitely need to hit that up. Guys, share your favorite vodka-based drinks. I don't know why. That's been my favorite so far. So help me feel the rest of it on this trip in the comment section. So Lionel Basel, why is this one on my watch list? We did a sector evaluation last week. We looked at the chemical company where we looked at Lionel Basel, Eastman, and Dow. And you know what? When you run the numbers for Lionel Basel, it just makes sense. The company pummels earnings, not pummels. They dominate earnings, dominate revenue. They are a great dividend paying stock, and the metrics look great. So you know what? Why not? They just announced that dividend. It was a 5.3% increase. So they did a pretty solid increase here for the company, especially when you consider the yield. On top of it, my wife and I own 24 shares. So you know what? I would love to continue just building that position as long as the numbers make sense. And we're about to tell you why the numbers may make sense when we run them through the screener.
Guys, it's time to look at LYB. We know that we've all, maybe have seen it on the channel quite a few times. If you guys don't know, I own quite a large position. I own over 100 shares of this dividend growth stock. Now, I want to actually pull up the S&P 500 price to earnings ratio right now. Since the market has taken off again, it is almost at 26 times earnings. It's at 25.5, the S&P 500. So let's keep that in mind when we take LYB. Which again, everything's as of the close of business on June 16th. We're recording this on June 17th. And guys, this stock is back over $90 a share because it was just recently under 90, but it's at 92.24. Forward expectations from the analyst right now are $9.61. So you already know it's below 10 there, guys. It's at 9.6 on the PE ratio. So,
almost a third
of the S&P 500.
Their annual dividend is $5 per share. With that dividend increase, they now have a 52% payout ratio. So it falls right in that 40 to 60% perfect payout range here that your boys love to see payout ratio range. So if earnings fall, they still have plenty of room to continue paying, sustaining, and growing that dividend going forward.
Guys, looking at that dividend growth rate here, 9 years of growing dividends at an average rate just about 5%. Obviously, they had a huge special dividend of over $5 per share a couple of years ago that, you could factor that in if you want. It is not currently factored in here. So again, you've got a pretty good growth rate. And as we already hinted, this dividend yield is pretty slick. The dividend yield is 5.42%. So you've got over a 10% dividend compound factor right there with Lionel Basel. And what we mean by that is if you dividend reinvest plus dividend growth, you're reinvesting back at that 5.4% yield, plus your dividend is growing at about 5%. So that, again, your LYB income should grow at 10% a year.
Yep, that's why we don't scoff at the 5.3% increase that we just had. One thing that we started adding into some of our screens here, we'll do it in a few videos here or there, the 5-year average yield. I know Lanny brought that up in a video. I thought it was a really cool thing to keep adding in too after Lanny brought it up and started jamming it in there. LYB's 5-year average yield is 4.77%. So their current yield is higher than their 5-year average yield, meaning that the stock could be showing signs of undervaluation as the stock price is in the denominator of dividend yield.
Now, Bert, year to date, this stock price has taken off just a little bit. It's actually up almost 10%, not quite the S&P 500, which is up over 15%, but they're up almost 10% this year. Over the last 52 weeks, though, dating back to June of last year, up only 3%. So, they've trailed what the S&P 500 is doing, which is kind of nice, which is kind of why, as dividend investors, we like to buy stocks that are on sale or that maybe have lagged the recent market, because typically to keep performing at or above the S&P 500 is very difficult.
It is. So let's summarize LYB, PE 9.6, payout ratio 52%, 5-year dividend growth rates 4.87%. They've increased for 9+ years. We're not considering the special dividend, of course. Their current yield is 5.42%, and they are up 10% year to date. Lionel Basel, dividend stock, #1 on our watch list.
All right, it's time to dig into Target. Ticker symbol is TGT, the second dividend stock here, a Dividend King for that matter. Again, they have over 50 years of dividend increases. Strangely, the stock's only down 12% this year, but man, they have come down far from their massive highs. And they've obviously been in the news with a lot of their recent fashion trends due to the LGBTQ plus month, Pride Month as well. So the stock has taken definitely a big punishment, and surprisingly they haven't popped back up over 140, 150 that I would have expected after what Intel has done essentially.
Yeah, and retail is going to be taking a little bit of a beating the rest of the year. The companies are sending out the warning flags about a potential recession and a slowdown in spending. So in addition to all the political stuff and all the nightmare that they're going through on this side, they're also dealing with the potential slowdown from the consumer, but that's to be expected and impact everywhere. Recently, we talked about on our Twitter account, we crossed the 100 share threshold for Target. So I was very excited to do that. We sold some Smuckers, got Target over the mark. So that was nice. And we'd continue potentially adding to it, especially if it keeps showing signs of undervaluation. Interestingly, this week, Lanny, Target announced a dividend increase, didn't they?
They did, guys. And, I didn't expect anything even close to 3% plus. And hey, that kind of met my expectations. They increased the dividend, increased it by about 1.9, percent, which again, you kind of take right now with everything going on with them, retail inventory, inflation, higher cost, smuggling, theft, you name it, what the Target has been going through. So you kind of just tip your cap and say, thank you for keeping us going. I don't care what everybody else is saying, like, oh, they're, but guys, yeah, they've done small increases. They've done massive increases. Last year's increase, I think, was 20%. So
forget about it. No, you're right, though. That's the beauty of why they're a Dividend King. They know how to manage their dividend increases through good times and bad to preserve as much cash flow as possible. It's not a bad thing that they decrease the dividend increase this year.
Yeah, so we're upbeat, guys. Let's get into Target again. Their price to earnings ratio at the time of this video is actually 16.18, which is below the S&P 500, based on the stock price of 133.81 with a forward EPS of 827. to slide right into that quick hitter dividend payout ratio. They are less than the 60%, similar to LYB. They're in that 40 to 60% sweet spot at 53.2% after that recent dividend increase, which they now pay $1.10 per share per quarter, $4.40 per year. Bert, dividend growth, hit them.
Let's go. 5-year growth rate's 11.74%. Obviously, we talked about how this last year is going to be much lower. They are a dividend king. They've increased for 54 consecutive years. So the dividend growth history is there. They have been through different recessions before. They've been through different down cycles. That is why it is so important and why it's so great owning dividend kings. Lanny, what's their yield looking like?
Yeah, so now that the stock price has come down from everything that they've been going through, the yield is actually up over 3% now. It's at 3.29%, so about 2x what the S&P 500 yields. And hey, it's a pretty good complement right now to the portfolio. Again, the 5-year average yield is 2.38%. If that gives you a little bit of indication of where they're currently trading at, where they previously have been over the last 5 years.
Yeah, and they are down 11.81% year to date, 3.94% over the last 52 weeks. Obviously, it's been beaten down. So Target, dividend stock number 2 on our watch list.
Guys, what do you guys actually think about Target stock right now? Have you been buying this Dividend King? Again, Bert's going to show the metrics here for both dividend stocks so you can see them. We're not going to summarize both side by side, but curious what you think of this Dividend King. If you've been adding at prices below 135, they were at below 130 for a few business days. So if you're able to catch it, people keep thinking it's going to go to $60 a share. If it is, I'm backing up the pickup truck and and loading up. LYB, I think it's been a big favorite amongst the dividend growth community. It kind of reminds me of like AbbVie, just without the attention.
Yeah, in a much
less,
it's an even more boring sector with the chemical stock, but it is gaining traction. People are starting to catch on to the yield and the dividend growth history for LYB. That's a good comparison. I like that one a lot.
Yeah. So what do you guys think about LYB? If you've been buying the stock, again, I know I own a crap ton of LYB. Love the dividend, love the growth. Yeah. Always packs a nice punch come dividend reinvestment time because it's being reinvested at yield above 5%. I just love it.
Yeah, it'd be great. I'd love to build our position in LyondellBasell to 30, 35 shares in the short term. I think that would be good. It's very easy to pick a share to LyondellBasell at a time when it's trading at $92. If it drops to the 80s, sure, I'll continue picking up. If it goes a little higher, maybe I'll pause, maybe I won't, but the metrics continue to speak for themselves. That is why I have no problem buying LyondellBasell right now.
There it is, guys. Let us know what other stocks you've been buying. Have you been picking up Verizon stock? Have you held on to Intel stock after they've surged about 30% over the last 3 weeks? Let us know what you've been doing in the stock market to keep your passive income stream, aka dividend income, growing. We're all trying to reach financial freedom here, and these are just 2 stocks that could help you on your journey. Obviously, both stocks that we own, so full disclosure, both stocks that we've probably been buying in 2023. I know I have bought shares of both in 2023. I think everybody was buying Target, again, back below 130. Bert indicated he even sold a smaller position to move those into Target stock. Again, he's really eyeing down Target stock now that he's at with the dividend reinvestment over the 100 shares as well. So very exciting, guys. Let us know in the comments what you think. And by the way, the giveaway, if you want to get that mug, the swag, like, comment, subscribe, comment with what stock you've been buying lately.
We love it. And if you haven't already, subscribe to the channel. Give this video a thumbs up. And remember, if you're not with us, you're against us.
That was Bert and Lanny from the Dividend Diplomats, over and out.